He promised that gold obtained by the government wouldn't flow out again. This was the showstopper that mystified the financial world. A promise to rig temporarily the gold market. There was some question as to the legality of the proposed issue, and either Morgan or Carlyle dusted off an 1862 statute. Thursday, May 30th, 2024, Monaco 64, home of alternative economics and contrarian views. So today we're going to look at whether the likes of JP Morgan, Goldman Sachs, or the bullion banks in general are arbing gold and silver from west to east, i.e. using the premium, the Shanghai premium, to basically, transfer physical gold and silver to China or Shanghai. And I think it's highly possible that they're doing it. And there is some proof that they might be doing it. And a lot of people, of course, think that the bullion banks don't manipulate gold and silver, of course, that it's a free market. But we're going to look back at history today and look at the fact that JP Morgan has been rigging or manipulating gold and silver since the 1890s. Yes, and I've got proof for you. It's in a book that we're going to refer to. Well, I'll show you the book right now. The House of Morgan, The Secret History of Money and Power by Ron Chernow. I read this book over 30 years ago. At the time, I wasn't into gold and silver, and that's why it's good to keep your old books, because you can find things that the first time you read about it, it didn't really mean much to you. But as you learn things, it kind of pops. It matters, right? So we'll do that today. Before we start, just wanted to talk a little bit about what's going on in the markets. Yes, we're seeing the stock market a little bit under pressure. We're seeing U.S. Treasury yields rise back up. They're not rising like greatly. It's still under control, but the 10-year yield, for example, yesterday we got up to 463. I think it was up about 8 basis points. And I think that's important. It's showing how fragile the system is, that bond yields start rising and the stock market comes under pressure. And today will be important as well in terms of economic data, because we're getting the first revision for the GDP for the first quarter. It's called the preliminary. The first one was the advanced. The advanced number came out at 1.6 versus an expectation of a lot higher number. So it'll be interesting to see what GDP says and if it's revised even lower. I've spoken many times over the last 6 months or so that we're noticing that the price of gold and silver in Shanghai, be it the futures exchange or the gold exchange. The futures exchange, of course, is a futures, but it's also a physical market. But the gold exchange is more of a physical market, and anyone in China actually can be a member of that. But in the Shanghai Futures Exchange, you have a lot of international financial institutions that are a member, including the bullion banks. But since late last year, yes, there's been a big premium, and they vary, of course, but there's always been a premium if you translate the Chinese yuan price to the dollar price by using the exchange rate. And we noted, of course, that in the beginning of December last year, there's a big premium between Shanghai and London, New York in gold. And lo and behold, gold spiked to above 2,100 because Shanghai was trading up there. And A lot of people have been saying that the ARB is impossible for the West because there's VAT. Just wanted to let you know that Miles Franklin, my precious metals affiliate in North America, has got a few specials this week. They've got a half an ounce silver Canadian polar bear at $2.50 over melt per coin. A lot of people have asked the difference between over melt and over spot. Well, Miles Franklin seems to use over melt for coins that are less than an ounce. So it's not really any different from the over spot. That's all it is. In terms of 1 ounce coins, they've got 1 ounce gold Britannias, only $59 over spot. I think that is a good deal. And 1 ounce silver kangaroos, only $3.10 over spot. So if you're looking to add to your stack, or if you're looking to start buying gold and silver, you can call Miles Franklin on 1-800-822-8080, or you can email them info@milesfranklin.com, and make sure you mention Mario or Monaco64. But I follow a couple of people. One is Eric Jung from Hong Kong, who is a gold and silver specialist. He's a mining company investor. And I also follow Oriental Ghost, by Xiaojin, who's a precious metal specialist as well in China. And they've been looking at all this, and they've been noting that in the futures exchange, the foreign participants, they can get a license not to pay VAT and bring in the gold and silver and take advantage of the arbitrage. So I think that is happening massively. So let's have a look here. First, show you proof that these bullion banks are present in Shanghai. So this is from, let's see, May 27th. And Eric Jung, he posts or tweets by Oriental Ghost, listed some of the international players who are enjoying the China gold and silver arbitrage on the SHFE, Shanghai Futures Exchange. If they're importing through the Shanghai Free Trade Zone directly, destined for the SHFE, very likely these entities potentially making a lot of money, dollars, renminbi, from the ARB. So here's the list. Got Gerald Metals, Jump Trading, Northport Commodities, Metalor, Mitsubishi, UBS, MTS. But let's go to the next page. We got some interesting ones here. Standard Chartered Bank, JP Morgan Chase Bank, London branch. Yeah, London. Who else have we got here? Bank Julius Baer. Let's go further. Who else have we got? Well, we got Morgan Stanley Group from Singapore. We've got MKS PEMP. And not sure, I've seen Goldman Sachs, but they might have joined, or oh yeah, I think Goldman Sachs actually is, here we go, is J. Aaron. There you go, number 9 on this page. J. Aaron and Company, Singapore. Yes, that is Goldman Sachs. And guess who worked for J. Aaron or Goldman Sachs back in the 80s? Yes, it was Jeff Christian of CPM Metals. So you can see that they're present there, the bullion banks. And we got a tweet here from Eric Jung, and he's used a meme here. He says Chinese silver ARB at Shanghai Futures Exchange won't pull Western silver price. Western silver price is up, but the ARB at the Shanghai Futures Exchange is due to Chinese VAT importers. Only a few CCP sponsors, Chinese government-owned entities, enjoy the ARB at Shanghai Futures Exchange. Oh, Chinese government notices says all commodity imports directly destined to Shanghai via the Shanghai Free Trade Zone are import VAT exempt. Therefore, all these importers enjoy the ARB, including authorized international importers. Well, and they are the bullion banks, all the other firms I showed you there. So he's basically saying there's a lot of people saying, oh, that can't be done, but it is being done. What else? He tweets again the other day. He says, good point, the bullion banks have the VAT exemption quotas from China. Maybe China is forcing them to ship physical metals from London to Shanghai. The bullion banks visiting the Shanghai Gold Exchange might be a bit to try reversing that flow. Why is this so important? Well, because I think gold and silver are much more important than just being commodities, and even for the bullion banks, even for the whole financial system, for the central banking fiat currency system. And that's why they do things like this. The mouthpieces of these bullion banks, they try to give you false messages so that you think that gold and silver are not that important. Case in point is this editorial I've spoken about a lot about from 2004, and it says going gold, the pointlessness of holding bullion continues to sink in by the FT. And they note in this as well, and I'm gonna, yeah, you can pause this video and read it. I think that was just like a head fake, because they know how important gold and silver are. And with that, I'm also going to talk about a little bit about gold and silver manipulation, and I'm going to refer to this book, The House of Morgan. And notice that the title is The Secret History of Money and Power, right? I think the new edition of this book has a different title, but this is from the late 80s. I think I bought this book late 80s, early 90s, when I was still living and working in Switzerland. So I've had it for a long time. So I'm going to go back here to a chapter 5 where it talks about corner. So it explains how in 1890 that Barings Bank had to be saved from bankruptcy because they invested a lot of money into Argentinian securities, and then they had a drought in Argentina and they had to be saved. And what's this got to do with gold and silver? You're going to see if you bear with me. So, to save Barings from bankruptcy in 1890, the Bank of England organized a rescue fund to which J.S. Morgan and Company and other rivals contributed. While J.S. Morgan was the precursor to J.P. Morgan. The old Baring partnership was liquidated. The reorganized firm would never again regain its former power, and the major Morgan rival was weakened. Before long, Baring shared supremacy in Argentina with the Morgans. Meanwhile, with the stigma attached to foreign holdings, British investors retrenched and drained gold from America. This exodus of metal was greatly accelerated by the 1893 panic, with its bank failures and railroad bankruptcies. Adding to European jitters are the American attempts to tamper with the U.S. currency. There you go, tamp down silver. Under the Sherman Silver Purchase Act of 1890, the U.S. Treasury had to buy 4.5 million ounces of silver monthly and issue certificates redeemable in gold or silver. This effectively put America on a bimetallic basis or bimetal basis. That is, money was backed by both gold and silver, expanding the money supply. For the hard money men of Europe, this looked as if it were an effort by American debtors to debauch the currency and repay loan loans in cheaper dollars. Ironic, isn't it, that back then the hard money men were the gold standard guys, and the easy money men in the United States were the silver people. These creditors venerated the gold standard as their safeguard against such backdoor default. So European bankers redeemed their dollars for gold and shipped the gold back to Europe. So here's the interesting part. For Pierpont Morgan, this was an alarming throwback to the days when George Peabody had to prove that Americans honored their debt. The Silver Act was repealed in 1893 under pressure from Morgan and other bankers, but wary Europeans feared that populist forces might yet wreck the gold standard and force them to accept unwanted silver dollars. So interesting that JP Morgan, or Pierpont Morgan, was fighting for a gold standard and considered silver an enemy. Well, it's nothing new. We know that JP Morgan manipulates silver, and they have done it, well, since the 1890s. So where's their proof that they manipulated the metals? Well, if you go a little further here into this whole affair. So here we go on page 75. Pierpont laid out an audacious scheme. The Morgan and Rothschild houses in New York and London would gather 3.5 million ounces of gold, at least half from Europe, in exchange for about $65 million worth of 30-year gold bonds. He promised that gold obtained by the government wouldn't flow out again. This was the showstopper that mystified the financial world. A promise to rig temporarily the gold market. There was some question as to the legality of the proposed issue, and either Morgan or Carlyle dusted off an 1862 statute that granted the Lincoln administration emergency powers to buy gold during the Civil War. When the deal was concluded, Cleveland gave Pierpont a fresh cigar to replace the one he had nervously ground up. Pierpont's blood was now at full boil. He wired London. We consider the situation critical. Politicians appear to have absolute control. If fail and European negotiations abandoned, it is impossible to overestimate what will be a result. So this was a meeting at the White House to save Pierpont's gold standard. And am I bashing gold here? No, I'm just showing you that they've been at this rigging gold and silver for 150 years almost, and they're still at it. So for those who think it's like a conspiracy theory, think again. So why was Pierpont so adamant to save this gold standard, to make sure that America stayed on the same standard as the City of London and Europe? Well, because a lot of his investments, a lot of his ventures, all the money he put into industry was financed by the Europeans. So silver was making it harder and harder for him to keep things going, because what silver was doing, it was allowing Europeans and whoever wanted to do it to arb. They would take the cheaper silver because it was more plentiful, redeem it for gold, and then get more dollars in Europe for it. So there was an arbitrage there too, but it was going to kill Pierpont's empire, and he had to make sure that was stopped. But now things have changed so much that, the situation is completely different now. You've got an up-and-coming economic and financial power like China. So I wouldn't be surprised that the bullion banks like JP Morgan and others would really care much about transferring a lot of gold from the west to east, because in the end of the day, they only really care about how well they do They don't care about how the United States or the American people do. And that's not why they're in business. And I highly recommend this book, The House of Morgan by Ron Chernow, because it's probably got a different title now, but a newer edition. But it shows that the House of Morgan really is a creature of the city of London. Yes, it's based in New York now, but it is derived from Peabody and Company, who was an American banker in the city of London. So there you go. With that, let's quickly look at where the markets are this morning. So it's around 8:30 a.m. London time. We've got spot gold at $23.35. It's down about $2. High's been $23.40. Low's been $23.22. So it's been quite choppy. Interesting day yesterday. Gold was down about 1%. And silver is actually pretty much unchanged and held quite well above 32. But this morning, though, here in London, silver's down about 1.3%. It's trading at 31.50. The low, though, has been 31.14. So a lot of volatility. And we're continuing to see, though, the stock market come off. I think the Dow was down about 400 points or so yesterday. Could have been a bit more, but right now the futures is down 359. The NASDAQ 100 futures is down 122, and the S&P is down 31. What about the currencies? Well, the pound's pretty much unchanged. It's at 127.00. The euro as well is trading around 108. The dollar, though, is down about 0.5% versus the yen at 156.76. What about the rest of the commodities? Well, WTI crude, that's down 0.25%, just below 79. So we've come off a little bit. Brent is down 1/3 at 83.12. And high-grade copper is down 2% overnight at 469. As I said earlier, we saw a fairly big spike in the U.S. Treasury yields yesterday. I think GDP will be a key number today, even though it's for the first quarter. But if that number is revised even lower, that might, I don't know what that will do. Normally, that would help the bond market, that would drive yields lower and maybe help the stock market. But in the current environment, it might also show that the U.S. is closer and closer to a recession. So it might have actually a negative impact on the stock market. So with that, I'm going to wish you all a very good day. Take care. Bye.